Good afternoon, beautiful people. What is going on? Welcome back to Young Money Investing, where we help everybody, no matter how young or how old, achieve true wealth in their lives. Another week has gone by. Man, I gotta say, I feel like last week was about a month and this week was about 2 days. So this just kind of flew by for me, but it is Sunday afternoon, so it's time for another technical analysis. I really enjoy doing these, so if you guys enjoy watching these, please go down and hit that subscribe button. And without further ado, let's go ahead and jump into the charts. Now we are starting off on a daily time frame for the DXY, looking at the US dollar index. I think this is a great place to start. I will probably add this to every weekly analysis going forward. If we take a look here, dollar pretty much just went sideways past week. Didn't really go up or down too much. You can see we had a pretty strong move downwards here. Ran right into my resistance level at about 101.62. Wicked down below it. Big strong close back above. Big strong move across our trend line and back up into our 50 moving average. And this kind of supply consolidation zone, which is in green here. Now we are sitting right below it. We are currently above our 50-day moving average. So that is still slightly bullish for the US dollar index. I would like to see, from a more bearish perspective, I would be looking for, go ahead and draw some things out here. A move down back to this resistance line right about here. And then this purple line is the 20-day moving average. So perhaps a bounce off, a rejection off the 20-day moving average, and then a move down to our lower resistance level at about 99.19. We will have to wait and see how this plays out. Those are just kind of some ideas. So you can, kind of some ideas in your head of where this might go heading into the week. So let's go ahead and jump into our first index. Start off on the Russell 2000. Russell has been trapped in this kind of consolidation channel for a very long time. We finally just broke out of it just at the end of January, found a nice, pop above, came back down. Kind of looks like we're seeing if this is going to be a false breakout or a, the first leg up on our way out of this channel. So we are just barely inside. If you can see here, the top of the channel is 1923. We are currently sitting at 1918. We did have this nice wick on Friday, came way down, closed right at about the same level. I got our close at 1924, but the low was 1906. We are kind of sitting right by our 20-day moving average as well. So what I would like to see is I would like to see price action hold, and then I would like to see price action move back up. That's personally what I'm looking for. If price action does move back lower, I think the first place that I would like to see some support come in would be right about here, right about 1863. I'd like to see some type of support come in. Maybe we catch a lift on our 50-day moving average. But like I mentioned before, I would like to see the top of this channel hold. I would like to see that 1923 level hold. And I would love to see price action move back up in a bullish direction. So let's go ahead and jump into the NASDAQ. NASDAQ looking a little similar to the Russell 2000. We did get a breakout of our trend line. Haven't quite, I don't think, retraced enough yet. We do have this 20-day moving average coming up, so we might catch a lift off of that. But I would expect a fall of about another 100 points or so before we really start seeing that play out. The other thing to note is around the same level, around that, 12, what do we call it? 12,180 or so. We have this level right about here. Little bit of consolidation right here. Wicks back over here. I'll adjust this down just a tad. There we go. That's about perfect. So yeah, about 12,175. So that would be a fall of about 125 points. That would work in confluence with the 20-day moving average. We might see this 200-day moving average start to turn around, but that is a much slower moving average, so I wouldn't expect anything crazy from it. Let's take a look at the Dow. Dow is still just consolidating. Nothing crazy happening. All sideways action, completely trapped within the top of this channel and our support zone underneath. You can see that our 20 and our 50, our two faster moving averages, are crossing each other. 1, 2, might have a third one pretty soon. So really what I'd like to see is, I'd like to see grab my brush here. I'd like to see a breakout in this direction, followed by a retracement down, and then a big move up. That's what I'm looking for. That's classic two-legged movement. I will trade that breakfast, lunch, and dinner all day, every day. That is my bread and butter. That's what I'm looking for. If we are going to move down, I don't want us to move down, I'll be honest. But if we were going to move down, we'd have to come through this supply zone first, and then we'd have to hold the 200 moving average or the trend line below it. So there are 1, 2, 3 levels of support below where price action is currently at. So I'm not super worried about it, but if it does happen, first place I'd be looking for some support to step in would be the bottom of our support here at about 32,887. Beneath that would be the 200 moving average, currently at about 32,350, and then below that the trend line. Now we got through our indexes, so you know what time it is. It is time for the trade of the week. I know I didn't have one for you guys last time, but I think that was a good call. In all honesty, nothing really happened on the Dow, nothing really happened on any of the indexes except for a little bit of retracement. So I think that was a good call. I got something special for you guys this week. We are looking at AVXL, Anavex Life Sciences Corporation. Let's go ahead and draw some lines. I'll be right back. All right, now, as you can see, I have a couple of lines drawn out here. You can see that AVXL is currently within this upwards channel. We've just touched the bottom, got to close above our 200-day moving average. The 50 is still below us, and so you might be thinking that this is going to be a long back up to the top of the channel, which would take you for a solid 13.5%. And yes, you might be right. You could do that. But what I'm actually thinking here is a little bit more nuanced, a little bit further out in the future, and potentially much, much more lucrative. I am looking at a counter trend trade. So stick with me. Upward sloping trend lines such as this generally break to the downside. They break in this direction. Okay. With that in mind, with the huge selling pressure that we have seen, I think that this would be a good place to short, and this is where it gets really interesting. I'll pull this up just a little bit. This yellow line is the RSI, or the Relative Strength Index. It measures buying and selling pressure. And as you can see, back here at our first peak on Thursday, January 23rd, it was fairly high, but then on our next peak, it was a little bit lower. And if you look up here at price action made a new high, and the RSI made a lower high. What that tells me, this is called bearish divergence. And what this generally means is that, yes, although price action is moving higher, it is doing so with fewer and fewer buyers. And so I want to be on the side that's going to win. I want to be on the side of the sellers. And what the sellers are going to do is they are going to absolutely decimate this stock. So what I'm looking for is I am looking for AVXL to come back up to the top of the channel. This would be the entry. Right about $12. I would say about $12, $12.15, all the way up to $12.25. Probably pretty solid entries. Stop loss is going to be pretty tight. You can set it at the top of this wick over here will be $13.23. So if you enter at $12.25, your risk is $13.25. That's $1. The short position, the target is going to be this long-term support. I'll actually zoom out to the weekly time frame. You can see it goes all the way back to November of 2020. It was resistance, it turned into support. We've tested it once, twice, thrice. It has held. That would be the target. So you are risking $1 to make, call it 5 to 1 risk to reward. I think this is a solid setup. If you guys appreciate this, go smash that subscribe button. I appreciate every single one of you guys. Mad love, mad appreciation. Peace out, homies.